everybody. I hope you can see me. I hope you can hear me. Welcome to the next in the Admirals trading webinar series. And here we are today to talk about managing risk during the intraday trading, which we'll come on to in a moment. But if you're joining us here, live, it's great to have you here. Or if you're watching this on demand later, okay, on the Admirals YouTube channel, then hopefully you'll find use and information in this. Just make sure that you subscribe, okay, to the Admirals channel. And what you'll also see is that there's a whole host of resources in there. So be sure to subscribe to us and get a flood of all great information coming forward. But as I said, today we're here to talk about the joys of managing risk during intraday trading. All right, and intraday trading is very popular. But what you'll learn from this particular session is that invariably is that managing risk, which is already should be your kind of primary focus, becomes even more important when you're sort of trading at sort of, let's call it, higher paced, lower time frames. So without further ado, let's just bring up the slides and start today's session. So if you just bear with us a moment, we'll do that. Super. So as I said, I hope you can hear me. I hope you can see me. I hope you can see the slides. Okay, that always helps, doesn't it? And as I said, we're going to talk about managing risk during intraday trading today. What I'm going to be doing is I'm going to be sharing some of my own particular experiences, my own particular thoughts and opinions. Okay, in terms of how to do this. A couple of very simple ideas that you can to hopefully take away to just ensure that you're doing this to the best of your possible abilities, because it is unbelievably important, and hopefully that will come out as one of the themes throughout our particular session. So as always, I also recognize that we always have a rather mixed sort of range of people here joining us today, from people who are complete beginners to traders who've been trading for a long while and stuff. So it'd be good to know if those are people here joining us today, what your own experience is of intraday trading. Maybe it's your main way of engaging with markets. Maybe it's something that you're interested in, but a little bit maybe sort of wary of, or maybe it's something that you just have no idea about because you're completely new to trading. It'd be good to know if you can just put that in the chat box, what your own experience is of intraday trading, and if you have been conducting it, how have you actually found managing risk during it? Is it something that has been important to you, or is it something that you've learned the hard way is to be taken seriously? So here we are, Admirals, okay, a global broker with a local support. As you can see, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and also allowing you the opportunity to engage with markets using both MT4, MT5, and also the Admirals Supreme Edition. If you have any questions about Admirals, please get in touch with your account representative. And as always, we've got a little bit of news from Admiral Markets, and what we can talk about is Admirals will now be able to offer copy trading, okay, as a service to clients. Maybe you are a successful trader who wishes to expand your business, or maybe you're a trader who'd like to be able to copy successful traders. That will now actually be able to be offered from Admiral. So once again, if you have any questions about that, please get in touch with the account representative, and they'll be very happy to help. And as always, you can join us on, across a wide range of social media platforms, but also on Instagram these days. And you can follow us there at Admirals Global. So be sure to do that. You'll find there lots of great information on there, and also lots of great sort of heads up about the kind of webinars that myself and my colleagues, Jens and Marcus, will be performing to you over the next few weeks and months. So be sure to follow us there. So what are we going to talk about today? Well, firstly, if it has to be sort of reinforced every single time, we'll talk about why is managing risk so important. What is it that is relevant to it? We'll talk about what can we do to help ourselves, particularly in that kind of intraday trading regime, and we'll have a chat about, well, what are some of the additional tactics and techniques we can use to improve our intraday trading in terms of looking at how we can manage risk. So as I said, if you are already an experienced intraday trader, then it would be great to hear what your own experience has been. Be great to understand that, be able to understand, how you have found it, what has been your particular thoughts and opinions. I think it's always great to get sort of other people's feedback, other people's insight, especially onto a topic that is so particularly popular. For those who don't know me, my name's Paul. I've traded for many years, okay, and invariably, I've traded for hedge funds and high net worth clients, and primarily I look to focus on FX indices and commodities for myself. For my longer term trading, I tend to be a trend follower, and for my short term trading, I tend to be a reversal trader or a mean reversion trader. And actually, the first hedge fund that I worked for, I actually focused on intraday trading, markets and stuff. So, as I said, I'm going to be talking from some of my own experiences in terms of how to sort of manage risk, looking actually how to sort of make sure that you're able to live to fight another day and actually become a successful trader. So, as I said, I'll be passing on a few thoughts and ideas about from that, based upon my own personal experiences. So, ladies and gentlemen, managing risk during intraday trading. As it says, lots of people are attracted to intraday trading due to its pace and opportunities. And very often that's what people are drawn to, because they think, that because it's fast paced and things moving, there will be more opportunities for them. And that is in some respects true. However, as the slide says, your engagement with markets is speeded up during such operations, which makes it easier to make mistakes if you don't know what you're doing. It is imperative to be able to keenly manage risk during such fast-paced engagements. And today we're going to look at managing risk during intraday trading. Lots of people think that, they might start off trading, on, let's say, the daily charts, okay? And, they start to get a little bit of an idea how to use a platform, how to analyze a market, how to identify setup, how to actually position size, how to put a trade on, how to manage a trade, and how to exit a trade. And that allows them to do that. And they build up a few routines and processes that help them. But, they think then they can go from trading like on a daily chart down to trading on, let's say, a 5-minute chart, and that everything will be the same. And in some respects, the processes are in a way very, very similar, but everything is happening much, much faster, And if you're not used to operating at that kind of level of intensity, well, it's just human nature that you will make mistakes, okay? That's just human nature. It doesn't necessarily reflect poorly upon you as a human being. It's just a case of that, if, when you engage any sort of, any kind of speeded up, okay, operation, well then, the opportunity to sort of make mistakes increases massively. So, I often talk about the kind of analogy of, many of you people here joining us today, will have your own car. You can drive your own car, okay? You've got your driving license and you've driven, for years quite happily, and you sit there, okay, and you've just got a normal saloon car, okay? Maybe you're driving a BMW or a Mercedes or whatever, okay? just a normal saloon car. And then, that's me. Then I take you out of that car and stick you in a Formula One racing car and say, off you go, here you go. I've got you a space at the next Formula One race. And in reality, it might be the same. You've got 4 wheels, okay? You've got an engine, you've got a steering wheel, you've got some pedals. In many ways, you might say, well, actually, it's just the same. But the reality is everything is happening much, much faster, much more intensely. And if you don't know what you're likely to be doing, well, you're more likely to come, in a Formula One car, you're more likely to sort of, come off at the corner and have a terrible crash. And a little bit like that for, intraday trading, okay? If you don't treat it with the respect that it deserves, if you don't prepare yourself properly, well, then all you're doing is providing a bigger window for you to be able to sort of, cause trouble, to yourself through. So Alex says, do you use seasonal trading ideas when there is a specific time slot with high probability of some currency pairs to go up or down? Listen, Alex, that's a very good question, but it's probably outside of the remit of this particular session, okay? This particular session is going to focus on, actually managing risk, okay? What are the things that people should be doing to ensure that they are, acting like a proper and professional risk manager? Talking about kind of seasonal trading ideas and such, that's probably outside the remit of this particular session. So congratulations, ladies and gentlemen. All right. So let's say, you've been trading for a few months. All right. You've been trading for a few months. you've been trading for the daily charts, okay, and you have you're doing well, okay, and actually you've been trading for, let's say, 6 months, 12 months, okay, you've honed your work, you've learned how to analyze a market, you've learned how to identify a setup, you've learned how to position size, you've learned how to put your trade on, you've learned how to manage your trade, you've learned how to exit your trade, you've learned how to debrief your trade, repeat your trade. So as I said, congratulations, you've made it further than 80 to 85% of most would-be traders. All right, most would-be traders, most people will give up within 3 months. Okay, you've made it beyond that, so congratulations to you. And that now puts you in the top 10 to 20% of traders in the world. So you can give yourself a pat on the back. And this is what I sometimes tell new traders, is that to actually get into the top 20% of traders in the world, it is not as hard as you think. It is actually not as hard as you think, and a lot of the people who do that is primarily because they have been managing risk, and they've been managing risk very well. And that is what's got them into, let's say, the top 20%. And then it's your job over the rest of your trading career to work your way from being in the top 20% up towards being in the top 5, then the top 4, then the top 3, then the top 2. Okay. And that will take as long as it takes, depending upon your personality, your trading style, market conditions, okay, how you manage risk, etc. But if you've got that and you've been doing that, trading that, and kind of on a medium term, maybe a swing basis, and you've been doing well, and you've decided that you want to sort of trade down the time frames, okay. And when I talk down the time frames, I'm talking sort of 1 hour charts and below, so using 30-minute charts, 15-minute charts, 5-minute charts, 1-minute charts. Well, what is the prize? Well, the prize is that you're now going to be swimming with the effective similarity of swimming with great white sharks, okay, and so you need to be prepared. All right, the people who operate well, okay, at their sort of intraday time, they are very, very good operators. And I've been very, very fortunate. I've worked for hedge funds as well, and I've coached, I've consulted, I've taught guys and girls who are very, very good intraday traders. All right, and it's as it says there, you're swimming with great white sharks. All right, and I don't say that in a way to be sort of dismissive or to be intimidating. It's more a case of this is something that needs to be respected, right? You are going into an environment where there are some very, very good traders, and you need to have respect for the market. You need to have respect for them. You need to have respect for yourself, respect for the capital that you are about to employ within that. And so, it's a case of being prepared. And as an aside, I can talk with that. I have done, if you've ever done that, I've done a cage dive with great white sharks in South Africa. Absolutely fantastic experience, amazing experience. I would happily do it every morning if I could, to get me going for the day. But what I took away from that experience is that it became very clear that I was out of my comfort zone, stood in a cage in the sort of in the South Atlantic, whilst 5 to 6 big great white sharks were hunting right next, a couple of meters away from me. And what you have to realize is you are no longer in your comfort zone. You are in their zone. They are where they are, this sort of alpha apex predator. And actually, you have to operate with respect. You have to, respect that, and you take that to trading. That's where you take that to trading in terms of when you're looking to operate on an intraday basis. And certainly in some of the especially some of the bigger markets, you are operating okay with those great white sharks, and so it's in your interest, okay, to actually to learn from them, to see how they operate, to respect them, to work with them rather than work against them, okay, because that's nobody wants a shark taking a bite out of your leg, and that's the same when it comes to trading, ladies and gentlemen. So I appreciate I'm being maybe a little bit glib, a little bit flippant, but the message gets across that you have to be prepared. All right, you have to be prepared. And when you swim with sharks, you have to manage risk acutely. And that's the same when you're doing intraday trading. And to help you with that, it's always interesting to sort of see this particular quote from Sun Tzu, the sort of legendary Chinese general. Lots of people have read his books, and part of that is to know your enemy, you must become your enemy. And that you might be thinking, well, what has that got to do with trading, Paul? What has that got to do with intraday trading? Well, what I have learned, okay, is that from my own work, from as I said, from coaching, consulting, okay, teaching people, is that as per like this Pogo cartoon from back in 1971, it is a case of we have met the enemy and he is us. And what I will find, and it kind of just comes back to that point I made a little bit earlier, it is that invariably, you're going to be swimming with great white sharks. Okay, you need to be prepared, but very, very often, all right, okay, people do more damage to themselves than the market does, and part of that is because they're not prepared, they're not really, sort of ready for it, they've not really respected, the market, and things are happening very, very fast. And when things happen fast, as I said earlier, the opportunity to make mistakes goes. Okay, so and one of the things I've talked about to people is, you will also have to be aware that, you will have a slump in performance. Okay. And slumps, especially for intraday traders, are the rule, not the exception. And how you manage them, that will actually determine your long-term success. All right. So, as I said, if you're ready, we've met the enemy and he is us. If you can take that on board and start to learn from it, and I'm going to show you, some rules that you can take on board to work with to help you, then you are starting to be prepared for operating in this region. And and that's what we're here, as part here as these educational webinars. Myself and Jens and Marcus, what we're trying to do is basically be able to sort of educate you and help prepare you, okay, so that you're able to operate effectively in whatever particular market environment that you choose to work in. So what can help you, okay, what can help you is that it is enormously helpful, and you should already have these if you're trading anyway, is you should also have checklists, process, and SOPs, standard operating procedures. It'd be interesting to know how many of the people here today have, checklists and processes that they have to hand, that they look to follow, that actually they utilize and help. It'd be interesting to know how many of people are already doing that, because what I'd suggest is if you're not already doing that on your, let's say, swing trading, longer term position trading, etc., then that gaping hole will become exposed very, very quickly when you're trying to do some intraday trading. And if you want to read a good book about it, this book, The Checklist Manifesto, is an excellent book. It's not about trading, but it's one of these books that as you read it, you'll realize it is all about trading. Okay, and it's about, it's actually written by a Harvard educated surgeon, and about actually how he was trying to help mitigate risk within operating theaters, okay, for surgeons and surgical teams, and how he talked about it, and actually how it helped and how it came about. And it's a great book to read, fascinating book to read. But if you haven't already got checklists, processes, etc. in place for how you operate, well then I suggest that you start by buying this particular book. Okay, it's a great book to read. Okay, really fascinating. And if you've been trading for a while, you'll start to see that, and you'll start to actually realize and recognize that how having small, simple checklists, how that will actually help you, not only just in your intraday trading, but in actually all of your trading. All right, in all of your trading will make a massive difference to helping you move forward. And one of the reasons I can talk about that is checklists actually came out of military aviation, in terms of, many years ago, probably about 100 odd years ago, is when airplanes started moving from like just having one engine towards having two engines and then four engines. What they found was that the pilots became overloaded with the workload, and invariably when there was a problem, they would miss something, there would be a mistake, and the initial mistake would get worse, and invariably it caused lots of airplane crashes. And so that kind of multi-engine military aviation, they took that on board, okay, and learned from that hugely, and it drives both military and civilian aviation and stuff. And so that's a photo for me in my nearly 30 years ago in my youth, okay, on sort of military operations there, okay, on a multi-engine jet, the Sentry, and invariably that has you could see that in action, okay. And when you go to fly in a plane, and I appreciate many people won't have done much flying over the last 18 months or so because of the situation we find ourselves in. But when you sort of step into a plane, okay, and you sit down to take your seat in the plane, and the two, the pilot and the co-pilot turn up, you will find that they will go through checklists. They will go through pre-flight checklists. And it doesn't matter. It doesn't matter if it's their first day on the job, or it's their last day before they retire after 30, 40 years as a pilot aircrew. They will go through those checklists. And the reason they do is because it works. Okay, it works. It makes sure that you're doing the right thing at the right time. and especially when there is an emergency, especially when things go wrong, okay? And, that's why, for traders, especially intraday trading, it is important to have these little simple checklists, okay, that you're able to follow, you're able to, to follow through on, and will actually stop you from getting yourself in trouble. Because when things are going well, and everything's kind of easy. Invariably, what happens is if there's a problem, if something happens, if something changes within the market, maybe, President Joe Biden sort of tweets something, weird and wonderful, okay, and that has the market spooked, market changes. Well, you need to know how to operate there. You need to know, what do I need to do when things like that happen? And having a simple checklist is what will actually help make sure that you do the right thing at the right time. And I appreciate that. I'm going on about it a bit and stressing a little bit, but I make no apology, okay, because I want to try and help you become the very best traders that you can be. And by doing this, ensuring that you're managing that risk, first and foremost, when you're intraday trading, will make a huge difference to your overall performance. So part of that is also an element of setting the right pre-market routine. And I think I put these two slides up occasionally whenever we talk about intraday trading, and I make no apology for it, because these are the things, the elements that have the pre-market routine that build into sort of small checklists that you can do. And if you're going to be doing something like price action trading on smaller time frames, your trading plan should be simple and clear. All right, it should be very, very simple and clear. And what helps with that is when you have a routine, okay, a simple routine that you follow day after day after day after day, okay? The beauty is in the consistency, all right? The consistency and the discipline with that. So, as I always say, you'll hear me always talking about, whenever you're opening a chart to look at an instrument, and it doesn't matter whether you're going to trade, sort of, 4 hourly on gold, or 1 minute on silver, or 5 minutes on euro dollar, or, weeklies on cable, okay? Have that simple routine, okay? That routine so your response becomes automatic, okay? So make sure you've identified significant levels in the monthly, weekly, and the daily charts. You might be saying, well, what's the point in that, Paul? I'm an intraday trader. Why is a weekly level of support, any relevance to me? Because what you'll find is that, what you want to do is you just want to be, forewarned is forearmed. You don't want to be selling into a significant support level. Equally, you don't really want to be buying into a particularly strong resistance level. Being able to know that beforehand will actually just help you sort of, stop making silly mistakes. As always, look for a price action trigger at those particular levels, and in particular, wait for the candle to close. When things are happening and fast, and you might be trading them 15 minute, 5 minute, 1 minute, becomes very kind of easy to sort of, get ahead of yourself, to think that you see a setup happening, and actually you want to jump into the trade before the candle has even completed. Don't. And rule 3 is enter the trade on the break of the candle, right? Generally, enter the trade on the break of that particular candle. That means you have to wait a little bit. That means you have to actually sort of, make sure that the actual trade trigger set itself. Always ensure that you're trading with a stop loss. The stop loss should be at either the other end of the candle or the kind of most recent sort of level of support resistance. No more than risking 1% per trade on your position sizing. We're going to talk about that even more in a few slides' time. And have you make yourself that you've got a good asymmetric reward to risk, okay? Or 1.5, 2 to 1, or the next significant level, okay? What I sometimes find is when people trade intraday, I find that they sometimes flip that. So they're risking 100 euros to make 40 euros, etc. Okay, they have a kind of a reverse that in terms they're risking more than the reward. So they have a bit of a higher win rate, but the problem is when they go wrong, or when they have a few losing trades in the trot, well, they're actually that kind of really doesn't look good for overall P&L. So where possible, we want an asymmetric reward to risk, and rinse and repeat. The good thing about routines are they are there to create consistency and discipline, and that is what we're looking for. Okay, a bit of consistency, discipline. Intraday trading is going to bring that out of you, very, very quickly. So being able to have a simple routine that you can almost rinse and repeat day after day, session after session, that becomes enormously important. And, it's when we look at, some rules and expectations, it's important to set those rules and expectations for ourselves. Risk management is absolutely key in our room. We're going to go into the steps of that in a couple of slides' time. part of that managing risk is knowing what news is coming out for that upcoming session. So, the Admirals website has a very good calendar on there. You should be able to find economic calendars, all over the internet these days. So it's important that you know what news is coming out for that session, because in the same way that, we don't want to buy into, big resistance levels or sell into support levels, you don't want to be getting into a trade just before big news, because you're likely to get sort of run over like a freight train. Conduct your analysis before trading. What does that mean? Well, a lot of people effectively, they'll just, get up in the morning, all right, okay, they'll open the charts and start doing their analysis as they're trying to trade. Don't. Okay, if you have a little bit of time the evening before, just do a bit of your analysis. In the morning, just set yourself the favor, maybe the first 20 minutes just to analyze your market. You're not going to take a trade. You're just going to take 20 minutes to analyze that market, develop and see if there is a particular bias building for that day that you can identify and work with. Do that, okay? Plan and then trade your plan. It might sound very, very simple, but ensure you have good internet connection, okay? Before lockdown, I would quite often, go into coffee shops in just around local cities, and I would see, people trying to intraday trade, okay, on a contested, internet connection, with 50 other people and trying to get on board in a cafe. That is not managing risk, okay? That is not a terribly sensible way to operate and run when you're doing intraday trading. Make sure that you have a good internet connection, possibly maybe even have a backup, okay, as well as using maybe, if your Wi-Fi or in your office, but you also know that you have a phone or you have a dongle and stuff that allows you to get back onto the internet. Because if your things are happening fast and you lose your internet connection just as your position goes live, gets triggered, that is not a particularly pleasant place to be, okay, especially once you start trading a particular size. And also, ensure you're rested and prepared for the session. That might sound just like absolute common sense. And you might be sat there thinking, well, Paul, I don't need to know that. It's common sense. But if there's one thing I've found from trading and working with people is that, just because it's common sense doesn't actually mean people follow it. All right. So if you've had a late night, if you've been out the night before, maybe, you're out partying, maybe you've been out having, you've had a few arguments with your partner, okay, a few lovers' tiffs or what, for whatever reason, if you've not slept very well, if you've got stuff on your mind, well, then the likelihood is that you're probably not going to trade terribly well on intraday trading. Okay, so just make sure you're rested and prepared for the session ahead. You're trading your money. Okay, as I said earlier, it's about respecting the market, respecting the other major players, but also respecting your capital. Respecting your capital, respecting your performance. This is a performance. It's a performance endeavor. It's a performance game. Okay, it's not a turn up, 40 hours a week, Monday to Friday, 8 till 5. Okay, this is a performance job, and it's about you performing at the very best that you can be. And so to do that, okay, partly to do that, okay, sometimes actually the best thing you can do with intraday trading is actually not to do it. All right, which might seem strange for us here to be saying something like that, but as I said, we're here to help and guide you. In some days, if you're not really in the best place possible, well, then actually sometimes the best thing is to just basically, maybe get some rest, do some analysis, work on your strategic business plan, and then come back and trade the later session in the day. So, what you can do, and what I suggest to new traders, okay, is invariably just, start to plan your week out ahead of you, okay, and actually start to score yourself on certain performance criteria, okay? Maybe you want to score yourself out of 1 to 5, maybe prefer 1 to 10, and then start to see, okay, how those scores are reflected in your actually trading. So, score yourself on how you planned the session, how you prepared. Score yourself, okay, on the trade selection, okay? Did you select good ideas, good trades? Score yourself on how you manage trades, okay? Were you able to plan your trade and trade your plan, or were you interfering in trades? Were you nervous? Were you anxious? Score yourself on your exits, okay? Did you actually let the trade run to its target, or did you sort of get in there early and either try to snatch at profits, or did you, sort of do away with your stop loss and let the trade, run further against you, hoping that it would come back? Or did you invariably, just trade very, very well and just, planned your trade, traded your plan, have the target, hit the target? Also score yourself. What's your mental state like? Okay, what's your mental state? Are you feeling sharp? Are you feeling alert? Okay, are you feeling absolutely, sort of inspired and in a good space? Okay, do you have a good individual trading state? Think about your physical state as well. Remember what I said earlier. Maybe you've not slept. Maybe you've, sort of overindulged. Okay, maybe you've not been to the gym. Maybe you've not even just been out of the house. If you, depending upon where you are in the world. Okay, during parts of lockdown, all of these things will have an impact. You should also score yourself on how you evaluate. How you evaluate your performance. How do you evaluate? Did you do what you said you were going to do? Okay, was it a good trading day? Can you sort of, also score yourself in your performance? Was it a profitable day? Okay, was it an income expense? Is a business expense day? All of these things start to add up. Was there a fun factor? Even score yourself on a fun factor, which might sound a bit of a strange one for trading, but trading should be enjoyable. Okay, it can be boring when you're doing it well. It actually can be quite boring, but it should be enjoyable. You should be enjoying. If it's feeling like it's a chore, if it's feeling like it's a slog, if it's feeling like hard work, well, then what that's going to happen is that will have an impact on how you perform the next day. Okay, so it's important to be aware of that. And then of all of that, give yourself a daily process score, just to add all those up. Okay, give yourself a daily process score. Start to see, okay, are there any particular trends or any particular ideas that come out from that? And you'll be surprised. You might well be surprised that actually, what you'll see over time is that there are particular trends that emerge in your own particular trading. So let's get into a few specific rules, okay, to help you managing risk during your intraday trading. The rule number one, okay, is rule number one. If you're on an intraday trading session, if you get 3 trading losses on the trot, well then, knock it off. Knocking off, is used to be a kind of a code word, okay, for ex-Air Force, that would be a code word to knock off an air combat fight, okay? But it is equally applicable to trading. If you have cut 3 losses on the trot on an intraday trading session, my suggestion, your rule should be knock it off, stop, okay? Stop. The reality is, for whatever reason, you are out of tune with the market, okay? It's not the fact that the market is out of tune with you. It is you are out of tune with the market, okay? And the best thing you can do is to stop, step back, reevaluate. It might well be, maybe you've tried to trade, and you didn't sleep well last night. Maybe, last night, you were busy thinking over things, in your mind, okay, to do with family or whatever, okay, whatever. But invariably, what you look to do is, knock it off. 3 losses on the trot, stop. Here's the thing from experience of my own and from working with lots of traders over the years, is a simple second rule for managing risk during intraday trading is, if you have not made your money in the morning, all right, if you have not traded well, and I'm talking about trading the European FX session, if you've not done well in the morning, you are unlikely to make it in the afternoon. Now, I'm not saying that is a hard rule, but that is a case of that is just a case of experience over the years. My view is that as the FX market, in particular in the afternoon, where you have both the European session coming to a tail as the Americans come into it, well, that actually the FX session can be a little bit more. It can be a little bit more volatile, okay. And if you've struggled in the morning session, trying to make that money back and kind of revenge trade in the afternoon to make money back you may have lost in the morning, it rarely works well, okay? It rarely works well, ladies and gentlemen. So, if you've struggled in the morning, as a general rule, you're unlikely to make it back in the afternoon. It's better that you actually just call it quits for the day, go back into your debrief process and start to understand what happened. Why did I do that? And if you do insist on trading, my suggestion is scale down your positions, okay? Just make it much, much smaller. One of the other things, rule number 3, okay, for managing risk during intraday trading, rule number 3 is know your numbers, all right? What does that mean? Well, that means there's a lot to that, but generally what we're looking at is, first and foremost, know your position sizing for the day, the week, and the month. Things are going to happen fast, okay? Things are going to happen fast. So it helps if you have your position sizing worked out. What I suggest for intraday trading is I suggest static position sizing. What does that actually mean? You might be saying, well, that means you only amend it at the end of the week or the month, not on a trade by trade basis. Keep it simple. Things are going to be happening fast. You need to be able to sort of, to operate and to manage. And what might help you with that is to create something simple like a position sizing matrix, okay? And you will see that there is some good tools on the Admirals website you can utilize, but equally a position sizing matrix might help you. Now, if this is just a very, very desperately simple, snapshot to remind people in terms of, how to position size. And when you're looking to position size, okay, in terms of, you're understanding what you will be risking, well, invariably what you're looking at is understanding your trade risk, which is the difference between your entry and your stop loss, and dividing that by your capital risk, okay? And as a rule of thumb, your capital risk is the monetary equivalent of, we're going to say 1% of your trading account. And when you do that, well, then that is what gives you your position size. And that is something that, you need to understand, you need to be aware of. But that can change, that can change based upon the number of positions you have open and closed, the number of positions that are winning, the sort of, the flux in your particular P&L of your trading account. And what you'll need to do is make sure that you understand your margin and leverage requirements. And there's just a snapshot from the Admirals website. And there is some fantastic information on there. Okay, and I sort of definitely commend that you go on there and sort of take a look and sort of basically take on board. So even just simple things, understanding the margin requirements for your as a retail client. Recognizing that, in terms of like FX pairs, your leverage is only operating from 1 to 30. Other pairs and things like, golds and their indexes are normally about 1 to 20, etc. This is the kind of thing that's important for you to know. And it's also important to understand, kind of from your leverage and your margin requirements, because as I said, things might be happening fast, and depending upon the size of your account and how you're trying to trade, what you don't want to be doing is actually having to sort of, worry about that whilst you're trying to get a trade on. Okay, if you're trading a 1 minute chart and things happen very, very fast indeed, well, then invariably you want to understand and know these long beforehand, so you don't get caught. You don't get caught on the wrong side of it. So, one of the things you can do is like, I have a couple of very simple position sizing matrix. Okay, you just knock them up in Excel. It's not, it's not terribly difficult. And what I can do there is invariably very quickly, I can know, what my overall balance is. I can know, and I have accounts in both sterling and US dollars. And, I can know, well, what is, I say, magic number. It's understanding what would be my position size if I was risking 2%, 1%, 0.5%, 0.25%. Okay. And then I also have across, well, actually, how much would that be if I was risking, if I had 100-point stop loss, 75, 50, 25, 20, 15, 10, etc. And actually even smaller than that these days. And the reason is that so I can very, very quickly, I can, amend that at the start of the week and just print that out. And if things are happening very, very fast in a market, and I actually very quickly need to know, well, I'm using about a 10-pip stop loss on that, I very quickly know, how much I'm going to be risking, what's my capital risk going to be, I know what my trade risk is going to be, okay, and then I can start to work that out in terms of, well, what kind of position size, in terms of, what kind of contract, depending upon what particular instrument I'm trading. So it's not very difficult. You take a snapshot of that. Okay, it's not very difficult to do in Excel. It's it's quite simplistic. But actually having something quite quick and simple whilst you're intraday trading is the sort of thing that might help you, okay, might help you very quickly. And what you will start to do as you keep good records is you will quickly understand, what your kind of average kind of stop losses are, right? So, you might find yourself, well, actually, Paul, when I trade the Dow on a 5-minute chart, my stops are generally, I don't know, about 40 points, okay? And so you'll be able to amend that, do that. So it'll just help you very, very quickly just understand what you're particularly looking at. And then also I have a little matrix to help me invariably with just basically each of the individual FX pairs to understand, how many contracts would I be trading if I was either A, trading a set number of, sets funds, or if I was basically trading a set number of stop loss in terms of stop loss pips. Okay, so it can very quickly and easily work out for me. Now, what you'll find is actually there's lots of apps out there these days that do it very, very well for you. There's actually some great tools on the Admirals website that you can avail yourself of that will help you enormously. But equally, you can also make one up, for yourself, because based upon how you're learning, how you're trading, how you're doing that, and having that, a position sizing matrix just makes it a little bit easier for you to work out your position size during a busy trading session, because things will be happening, the squawk box will be going off, the market will be moving, you're trying to work out your entry, your stop loss, you're trying to position size, things are happening very, very fast. And as I said right at the start, if you don't have a little simple routine that you can follow, well, then it just opens up the opportunity for you to make mistakes, and that's what we're trying to avoid. So here's rule 4 for you, okay? Managing risk during intraday trading. The rule 4 is less is more, all right? And what I mean by that is risk less than you think you should. So for me, okay, when I'm intraday trading, I'm actually only risking like 0.25% per trade, all right? That's actually all I'm doing. Now, I appreciate that, depending upon the size of your account, that might not be feasible, that might not be workable, but, what I say is generally risk less than you think you should, okay? And certainly you shouldn't be risking anything more than 2% on an intraday trade, right? And for me, I will risk basically 0.25% per trade, and my total max for the day is 2% for the day. Okay, it's things can happen fast, things can move, and I actually I have that, and it's actually exceptionally rare. Off the top of my head, I can't remember when I kind of hit my kind of 2% limit on an intraday trading, okay, because I'm managing it very, very expertly, okay, very, very quickly and stuff, very based on years of experience, okay. But I have those rules in place, those kind of simple rules, okay. Less is more. Rule number 5, all right. Rule number 5, debrief, okay. After your trading session, make sure you close down your trading shop. And by that, I mean, make sure you get all your post-trade records completed, okay. Then do a debrief. It is the only way to get better, all right. It is the only way to get better, okay. To basically keep good records, make sure you keep good records like a good business would, and then debrief it. What did you learn from that trade? Maybe it was a technical issue, okay, that basically you learned about the setup, just didn't work in that particular environment. Maybe it was just something that a news, you got caught unawares by a news announcement. Maybe invariably, okay, you just found it was difficult to get your position sizing done correctly, and actually what you need to do is to tweak and amend your little position sizing matrix to make it very quick and simple for you to be able to do your position sizing, so you're managing your risk, okay. Maybe you risked a little bit more than you thought because you had a bit of a fat finger, okay, and instead of actually sort of wanting to trade 5 lots, you actually ended up trading 0.5 lots, okay, which because of just the fat thing, because things are happening fast. All these elements need to be noted down, and all these elements you can work on to improve it, so you're actually your execution is becoming better and better day after day. So in conclusion, ladies and gentlemen, intraday trading is a very popular endeavor with traders. Lots of traders, okay, are drawn to it because of its pace, because of its abundance of opportunities. However, just as I said, you have to realize everything is speeded up. Everything is happening, factor, could be factor of 5 faster. And when that happens, okay, in any area of life, if you're operating really at the edge and things are going faster, it allows a bigger opportunity for you to make mistakes, and they rarely work out well. Hence why it becomes imperative to ensure that a trader is really focused on managing risk. And what can help with that is to have processes and checklists in place to help you with your endeavors. So, go away and get yourself a copy of the checklist manifesto and read it, and that will convince you of the importance, okay, and actually why they're relevant, why it works so well, and also start to get you thinking about how you can do it for your own trade. To begin with, ensure that you risk small amounts until you're comfortable trading lower time frames. Okay, you heard me there. I only risk about 0.25% on a trade generally. And what I say is, risk very, very small amounts until you get used to it. Okay, you're in a new environment. If you're coming new to it, you're in a new environment. Just respect the market, respect those great white sharks. Okay, respect your capital. Okay, and just start to gently learn yourself, understand how things operate, recognize when things are happening very fast. And you will start to. It will help you sort of improve as a trader on a day-by-day basis. So there you go, ladies and gentlemen. Just don't forget to join us next Wednesday, where actually what we're going to be talking about is what will the second half of 2021 offer traders, including where are the US indices leading for the back end of the year? Will the commodities boom continue, or will it start to slump? What kind of geopolitical events can we look forward to? and how can traders turn these threats into opportunities. So that'll be 2 o'clock Wednesday, 18th of August. Check your inbox for the webinar link or go onto the website to register for those live webinars. So I hope you found that useful. I hope you found that interesting. If you have questions or thoughts, by all means, you can contact us there. As you can see, global@admiralmarkets.com. And you can see there are other ways to sort of connect and work with us if you have particular questions or thoughts when you've been watching this particular video. So, as I said, I hope you found that useful. Let's give you some food for thought, how to think about, how to manage risk in intraday trading. As I said, it's imperative that you do it and you do it well, okay, and it will benefit you in the long term. So, as I said, if you've been watching this, okay, on our YouTube channel, and you found this useful, if it helps you, give us a thumbs up. If it didn't help you, well, actually, that's okay. You can give us a thumbs down. We appreciate the feedback, but ensure that you subscribe to the Admirals YouTube channel. And as I said, then you'll be able to see the vast majority of the fantastic content that myself and both Jens and Marcus are putting out there on a daily and weekly basis. As always, all that's left for me to say is that I wish you the very, very best of success in your own trading endeavors, ladies and gentlemen. And I look forward to speaking to you soon. Trade well, everybody. Cheers.